listen, babe.
Right, good morning once again. The date today, the 17th of the second month, February 2026. It's currently Tuesday, 18 minutes past 9, New York Standard Time or New York time. And we're back again for another live stream. My last live stream was last week, Friday. We had a pretty long weekend with Monday being a bank holiday. So I didn't stream yesterday. I didn't do any trading or anything like that yesterday. I didn't even look at the chats that much. So yesterday was a chill day. I treat yesterday pretty much as a Sunday. But we're back here on Tuesday for our first session, our first trading day of this week with a fresh fund challenge account from Lucid, 50K. So let's see how that plays off for today and going for the rest of the coming weeks. As you know, last week I blew my funded futures due to indiscipline and a lack of patience and greed. Not greed per se, but trying to pass before the weekend because I was like $500 away from passing, and I was like, I'm not going into this week with challenge accounts. I was like, I want to be in funded stage. I'm only 500 away, so that should be easy. But the conditions was definitely high resistance liquidity run, which is difficult price action to be traded, and it's best to just sit on your hands. We didn't do that, and I was glued in front of the chats after ending the stream on Friday. And again, I take huge accountability for my actions because that's the only option there is, and just keep moving forward and learning from our mistakes and actions that we made. That being said, let's get into the chats and see what NASDAQ is all about today. Let's see if we can get a nice start on those accounts, on this account, sorry. So let's see here. I'm on the daily time frame, as you can see. And what I'm looking at on the daily time frame here is this volume imbalance, that yellow area here. And I also have it graded with the quadrants, the upper quadrant, the lower quadrant, and the consequent encroachment. You can see yesterday price went up into Friday's wick and trade into the consequent encroachment and fall off the bed and take the previous week's low, right? So we want to see how much lower price can go. Again, I'm bearish. I'm not expecting bullish price action, or I'm not leaning much on the bullish side. I'm definitely bearish, and I'm looking at this inversion gap here on the 4-hour, this gap here, which I would not mark out just in the event, just for the sake of keeping my charts clean. I would not mark it out. So dropping down into the 1-hour, and the 1-hour, I'm looking at this fair value gap here again, which I would not mark out in the event of keeping my charts clean as possible. I want to keep my chart as clean as possible. So now I'm down to the 15, and let's just observe how price action trades here on the 15-minute, right? 5-minute. So I'm just looking for potential levels where price can be interested in gravitating to. We take sell side. We have buy side intact, buy side intact. So let's see if we can see a higher run or a lower run. I'm not really getting a solid bias as yet, to be honest. But we take sell side liquidity. So let's observe where they send price thereafter. That here would be Monday's first presented fair value gap, which I would annotate and also change the color. Let's change the color to this. Again, that yellow area is the volume imbalance on the daily time frame. And I actually think I would remove it, and I would only keep the quadrants because that is as much as I need, just the quadrants. So I would take it out and I would only have the different quadrants on the chart. We have the opening bell in just a couple minutes, so we'll also want to see how that opening range gap opens. That will determine our bias for the first 30 minutes of trading. So most likely we have a premium gap open based on my price is currently. We would see. So what I'm looking at the sell liquidity resting here, relatively equal lows that look really smooth to be run into and to be traded into. Then we have the lows resting just beneath here, pre-market lows. We still have London highs is already, so we still have London highs intact as well. So we have London highs, that would be here. So we have London highs also intact. So we want to see where price, initially wants to gravitate towards. So let's just see. But I'm keeping my eyes preferably on those relatively equal lows resting here. It's really clean and reasonable to see a price run down there. So let's just sit in our hands until the opening bell. Again, we have no news drivers. Right, so let's see how the opening bell is in just in a couple. So if I look, right, so again, most likely it's a discount gap. So that means our bias for the first 30 minutes is pretty much bullish, with a potential retracement back to the 50% of the opening range. So here would be the high, most likely, and the low would be placed down here for about reasonable enough to see some volatile price action. But let's just see. I'm looking at the relatively equal lows. These lows resting here is where my attention goes. Let's see if that can be targeted. So I'm looking at this fair value gap here. Let's see if that can be a means to send price into the relatively equal lows. We have the opening bell in just a couple of minutes, about 2 minutes, or 1 minute and some seconds. So we want to see how that opens, and that open will determine our expectation for the AM session. Right, so I'm not doing the end yet, as mentioned. Still sitting on my hands. I'm waiting for that opening bell. Let's see what price action offers thereafter. Again, I'm more leaning on the bearish side. Overall, order flow is definitely bearish for me. Right, so we have the opening bell. Now let's see how price trades here. Again, the eyes at that relatively equal lows, resting just beneath price. So we had a discount gap. That means our bias for the first 30 minutes is bearish. Let me just get those quadrants up. Alright, so I'm just watching the ES, watching the averages to see if we have correlated assets. Alright, so I have the quadrants marked up. We have that consequent encroachment being the dash area right here. So let's see if that can be targeted. And most likely it would be. But that's nice. I like the fact that the send price higher. If we're expecting bearish price action, it's reasonable to see the send price higher first to create some form of deception or manipulation to fake traders into buys and then drop it against them after for a low resistance security run or for a larger range. But let's see. Here I'm marking out also the opening at 8:30, sorry, the opening at 8:30, and then I'll also mark up my midnight. I'll also mark up my midnight opening price right here. So we're above midnight and we're also above the opening bell. Not the opening bell, sorry, the 8:30. So that is perfect and favorable of seeing lower prices. So let's just see here. We have pretty much correlated assets, all of them in synchronization. That is perfect. So let's see if they just want to bump price up more into the opening range gap. Again, I don't need it. If I'm bearish, I don't need price to go and fill the opening range gap, nor even reach into the consequent encroachment. So even in that area right here, that the lower quadrant is areas where I would like to see price start dropping and going off the bed. You don't need to go up into the consequent encroachment of the opening range gap. So within that area here is reasonable for me to start seeing some form of bearish displacement. But again, let's just sit in our hands and keep observing and wait for price to show us an opportunity that it's willing to trade lower. Right, so they run price much higher. Let's see what happens here now. That gray area here is the first presented fair value gap of Monday. So let's see how they treat price around that area. And again, remember we still have London highs intact. So we also want to see if they want to run to London highs. Again, if we're bearish, I don't want to see them fill the opening range gap completely. Preferably, I would like to see it remain partially, a portion of it remain unfilled if we are bearish. Right, and I will just go to the 15 to see if we have any PD areas to the left. Well, let's observe here. So London highs get taken already actually. So my mistake there. London highs already get taken. So let's see how they treat pricing here. That would be perfect if that acts as a Judas swing, right? Deceiving traders into buys. And the first presented fair value gap would now be this gap right here. That would be our first presented fair value gap. Right, so I'm looking here. I'm looking relative to see what price is here. My eyes again is at that relatively equal lows right here. Well, let's see if they would carry price much higher. Then my eyes would go to this level here, the consequent encroachment of Friday's wick, and then we have this fair value gap in the blue area. That's this daily fair value gap here, right? Let's see if they want to take price up into this. So you can see how dynamic things is and how quick your bias can change according to how they print price. So let's just observe in that area here what's happening. right? So I'm looking here. So we had the high of the opening range gap. Again, preferably I didn't want to see that. I didn't want to see the fill the gap completely, but that's reasonable. Now I want to see how price trade here. If you get a strong closure at the outside of the gap, then that would change my bias to potential bullish, right? Where price should stay in the upper half to trade higher. But right here, preferably I would like to see the start dropping price to the downside. That would maintain my bearish bias. So let's see here. I like how we stop at the high of the gap. That is still elements of the bearish narrative. So let's just observe how price trades here. Again, my eyes is at these relatively equal lows resting here. If we switch to bullish, then I would look at this area up here, this gap up here, which is the daily fair value gap. But preferably, again, if I'm bearish, I don't want to see any strong closures above the opening range gap high. I want to see price banging around the high of it and remaining inside of it. That would indicate to me that we're still bearish. By failing to close strongly outside of it, that would still give me my bearish narrative and willingness to see price go much lower. So I like how we're trading around the high here. That's the place where I want to see start falling off the bed if we are bearish. But let's just observe. So I would switch. I would split my screen in half. That way, once I see the opportunity, I can execute on the micro contract. So again, my eyes is at the lows, relatively equal lows. And we're in a premium, perfect to see displacement lower, or perfect to see a sell opportunity. So I'm liking how the wicks is playing here. I'm liking the kind of wick action getting inside of here at the high. That is still showing me elements of bearishness. And I'll watch to see if that down close candle can become an order block. This up close candle, sorry, I want to see if it will become an order block. That's this here. If price is to go lower, you'll want to see that start happening. All right, so perfect. I like to see that. So now I'm watching price action here. So I sold here. Again, my eyes at the relatively equal lows, resting right here. So I like the displacement that we get in there. I would like to see price continue dropping. So I want to see price continue falling off the bed here, using the first presented fair value gap as resistance to go lower. And I would be out completely, right, even before the relatively equal lows, because I have to meet the 50%, the rule. I have to stay within the rules, the 50% rule. So my stop move to break even. Let's see if we can get our target smashed here. So I roll my stop down even more. Let's see if we can get target hit. Or I would close manually. So price is trading at the midnight open. I want to see price start continue going lower. and we should get our target hit. Let's just observe. We have 30 more minutes on that candle. Right, so I'm out there, and that would be it for me on the day. I could have get out way lower, right? But I come up for maybe about $1,000 or something like that, or $900, and I'm satisfied for the day. So you can see the narrative here. First presented favor the gap. I was looking for the full TP, but we didn't get it. We could have just gotten out at midnight, but it is what it is, and I'm still satisfied with that. But we should see price continue lower and run into those relatively equal lows resting here, right? And we should get that. We should get that anytime from now. Let's see, right? And there we go, bam. So we get out, we get stopped, but it is what it is, and that's pretty fine. But we get our full target reach here, and that's perfectly okay. And that would be it for today. Good day and good trading.